Good evening, ladies and gentlemen. John Kelly for Options University on Sunday, October 16th, 2011. Disclaimer, trading always has been, always will be risky. Let's get right to the news. What's coming up later this week, Friday and Saturday, is the European G20 Summit to deal with the default situation with Greece and to limit it so it doesn't spread to the Italians, the Spaniards, so on and so forth. They are bolstering the funds so that the banks can improve their bottom line in anticipation of a default. Now, if you notice, there was no news about Greece not making its interest payment on its bonds Friday, so that's been done. That gives them some breathing room till at least early November. Greece has enough money to cash flow the situation, so they're trying to put pressure now on the U.S. and Geithner to increase the funding for the IMF to provide additional funds. We'll see. Now, the rally that we have been under here for the last 9 trading days since Tuesday of 2 weeks ago, the institutional hedge funds have not participated in this rally. This is the VIX 20-day buy to open put call ratio. This line here going down indicates that the hedge funds are shorting the market and using VIX calls to protect their position. And if we look here at the NASDAQ, a beautiful increase. The performance of Google, anticipation of Apple earnings on Tuesday after the market, of IBM, the market has been on a steady push up, and the downslope of the 50-day moving average here in light blue has been reversed upward. The 200-day is flat, but if you look here at the volume, the hedge funds have not participating. That's the NASDAQ. Look here at the E-mini, the same thing. We have the death cross, the downward slope. It's been flattened. This range that we've been in from 1068 up to about 1220, 1230, we are right at the top of this range. We broke the top of the range with the NASDAQ that we had been in. But in the E-mini, S&P 500, we're just at the top of that range. The volume is down significantly. The hedge funds are not participating. Now, what does that mean? It's that retail investors like you and I, and we're about $3 trillion of the $20 trillion in the markets right now, we do not hedge our trades. We do not put protective puts on them. So here we are riding this crest in this wave. When the market turns, we bail immediately, which accelerates the downward move. It becomes very sharp and very fierce. As opposed to hedge funds, when they put on a position, they protect it with a put, so that when the market reverses, they hold on to their positions and their puts gain value. The markets decline a lot slower when you have the funds protecting themselves with the protective puts or protective calls in the case of the VIX. Now, the VIX did break below the 30 figure on Friday, so we are below 30 for the first time in 2 months. We have Apple earnings coming up after the market Tuesday. Have IBM tomorrow, as we're going to see here. It's going to be a heavy week for earnings. So the VIX may continue to come down. I don't see what's going to cause the markets, the fear factor, to come back. So let's take a quick look at where things are going to go this week. Monday, a very busy Empire Manufacturing, industrial production, capacity utilization. Now the slew of earnings. Before the open, Citibank and Wells Fargo. Halliburton. After the close, IBM, Steel Dynamics, VMware. The earnings continue on the onslaught. PPI and the core PPI on Tuesday, along with the housing market index. And before the open, Bank of America, Harley-Davidson, Coca-Cola, Goldman Sachs. That'll be huge. EDU, the private educational firm in China. Polaris, wonderful vehicles. United Healthcare. After the close, Apple. Huge, absolutely huge. How are the institutions and analysts going to react? The earnings have got to be good, but with Steve Jobs gone, this will be interesting to see whether they have a vote of confidence in Tim Cook or not. Cree, CSS, Railroads, ISRG, Intuitive Surgical, Johnson & Johnson's, Wynn, and Yahoo. On Wednesday, core PPI, along with the PPI housing starts, building permits, and the Fed Beige Book late in the morning. Earnings before the open: ABT, Apollo, Private Educational, Morgan Stanley, PNC Bank, and United States Bank, USB. On Thursday, again, weekly jobless claims, existing home sales, Philly Fed leading indicators. Remember the Philly Fed numbers a couple of weeks ago really was a shock to the market. Before the open, APKT, ALXN, which has been at the top of the IBD 50 list now for the last 4 or 5 weeks. Diamond Offshore, FLIR, Ingersoll Rand, Microsoft, Monroe Muffler, very important for that sector, NUE, Philip Morris, and Tempur-Pedic mattress. After the close, Altera, ATHN, Boston Scientific, Capital One Finance, Chipotle, Eli Lilly, Southwest Airlines, First Third Bank, SanDisk, and AT&T. And then nothing on the way of news on Friday, but the earnings keep coming before the open. GE, Honeywell, KSU Railroad, McDonald's, Schlumberger, and Verizon. So it's a heavy week. It will give a telltale of where it looks like the fourth quarter earnings are going to go. And it's the guidance that will also be bullish or bearish. Leisure retail, still bullish. The XRT is now above the 50-day moving average. Amazon, Green Mountain Coffee, Ralph Lauren, and Lululemon are all pushing on that. The large cap tech, still bearish, but the Qs Friday closed above the 200-day moving average and are actually approaching the yearly high of 59.83. But as I showed you on the NASDAQ, the volume is very weak. The institutions are not participating. This rally could fold at any time. And the reason being, the financials are bearish. Moody announced the potential downgrades of the banks this week. It's earnings weeks for most of the financials. If they don't come through this with flying colors, it could signal another round down. And the rally cannot succeed without the financials. That's always been the case. The base recount list, I added Baidu, TSCO, and HMSY to the existing list. And in the trade section, what ideas we're looking at, the following stocks. And I think you'll be surprised which ones I'm recommending to the long side and which to the short side. And we'll look at that in the gold member section.